Hello and welcome. This is All You Need to Know. I am Agam Bakil. Let's start off by taking a look at how things have panned out in the markets abroad. Starting off with the US markets, well, mixed cues coming in, but when it comes to the major indices, we're seeing flattish moves marginally in the green. Europe again, once again mixed. As you can see, the FTSE did end the day with 0.5% gains, but otherwise marginal losses for other important indices. And the mixed cues do reflect in the Asian indices too. Well, once again marginal moves coming through, and that's also reflective of what we're seeing on the SGX Nifty at this point in time. Down by as much as nearly 0.1%, 16 points down, not too much to speak for. In yesterday's day of trade, we did see strength in the benchmark indices, but not so much when it comes to the broader market indices. So while the Nifty did advance by 0.4%, we saw mixed cues coming in from broader market indices like the mid cap and the small cap index. And it was the same for the two different banking indices too. So while the Nifty Bank closed marginally in the green, the Nifty PSU Bank actually declined by around 1.5%. Let's take a look at the ADRs, or rather the other sectoral indices then. And the Nifty Metal Index advanced by around 2%, essentially on the back of the gains that we saw in NALCO. IT also advancing by around 0.5%. Coming down to the ADRs, there was weakness in ICICI Bank, Dr. Reddy's, Tata Motors, as well as HDFC Bank. On the other hand, marginal gains for the likes of Vedanta, Infosys and Wipro. Let's also take a look at your foreign institutional flows. About 161 crores worth of equity moving out on a net basis. DIIs, on the other hand, also selling equity worth 200 crores on a net basis. So watch out for these numbers. And well, it could get a little volatile considering we are well approaching expiry. But when it comes to contributions, half the gains on the Nifty essentially were on the back of Reliance Industries, which advanced by around 24 points. And of course, HDFC Bank and Maruti Suzuki, among many others. When it comes to the futures and options space, well, rollovers will have started to take place, and we're looking at open interest decline, and it's the same for the Nifty Banking Index too. Will decline in the August futures by around 16% when it comes to open interest. And moving in when it comes to your open interest distribution, well, as you can see, there's stiff support around the 11,500 and 11,700 marks. That's where you have an accumulation maximum open interest for the puts, and of course on the call side it is now 11,800. So as you can see, the range has now shifted higher to higher levels. Of course, in yesterday's day of trade, the most active options were around the 11,700 mark, unwinding in the call and writing in the put. But the Nifty put call ratio is now at 1.9. This is the highest I have seen in a very, very long time. Of course, just a week or two ago, we did see that come to around 1.91, but this is the highest now. So that means that you have two puts for one call in open interest. It's the same for the Nifty Banking Index, which has also moved up around, or rather fallen to around 1.35. Now, let's take a look at some of the other stocks. Now, we do have Dewan Housing Finance, IDBI Bank and Punjab National Bank moved into the F&O ban. So we are expecting restricted trade there. On the other hand, Exaware and Jet Airways moves out of the ban. Let's watch out for these stocks. Equitas Holding, well, longs building there, but on the short side, we have more weakness in something like Apollo Tires, and we have also seen a weakness in, well, GAIL India, which declined by around 5%. So a lot of stocks out there to watch out for, and of course the benchmark indices, whether or not we do see consolidation, considering a lot of technical indicators is showing that the markets are in an overbought zone. But now let's go across to Bloomberg's Paul Allen for the top international headlines.
New report says the number of deaths in last year's hurricane in Puerto Rico is vastly higher than thought. George Washington University says about 3,000 people died. That's far more than the total of 64 in the island's initial estimation. Some other investigations put the tally as high as 5,000. Yet Governor Ricardo Rossello says the George Washington report will be the official total. President Trump warned social media to, quote, be careful, as he accused Google of rigging search results to offer negative news about him. He went on to say that Google, Facebook and Twitter are treading on very, very troubled territory, and later tweeted that the situation will be addressed. The president commented after Fox Business said Google favoured liberal news outlets. He offered no substantiation for his claim. Huawei is appealing to the Federal Trade Commission for help as it fights limits on access to US markets. It says restrictions based on national security concerns harm consumers by reducing competition. It also insists it is not a danger to the US. Huawei and rival ZTE have come under increased official scrutiny over fears their devices and equipment could be used for spying purposes. A little-known Swiss bank has reached a deal with the US regulators to pay a fine and provide information about hidden accounts used to dodge taxes. Basler Continental Bank will pay $60 million and will forfeit fees it earned from the undeclared accounts from 2002 to 2012. The Miami US Attorney's Office says that at its peak, the bank had more than 1,100 accounts for US clients worth a total of $813 million. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
We're asking of Canada to consider joining in the agreement that's already been reached with Mexico. That's the basic ask that we have. What remains to be seen is how close the Canadian attitude is toward that, and if there are any modifications that work for us that would bring them around, or if they want too much.
So, as I understand what you just said, there is some room for negotiation. This is not a take it or leave it from the U.S. point of view.
Well, that's not what I really meant to say. Most of the chapters have already been agreed to and were known to the Canadians for quite a while. A few of the more recent chapters, the details are new, so the first question will be getting the Canadians to understand what the implications of those chapters are, and then the question will be what's their reaction to them, and are there other chapters that they think might be important?
One of the issues that's been a bone of contention from the reporting is the so-called sunset clause. And as you came out with it, as I understand it, there'll be a review every 6 years by the parties. Is that one of the more recent chapters that the Canadians have not had an opportunity to really assess?
Yes, it is a recent chapter. Originally, Ambassador Lighthizer had been requesting a 5-year sunset. Now, in effect, it's 6 years. And it's a little softer language than the original sunset language.
And so we don't have a signal yet from the Canadians whether they could be amenable to that approach.
Well, we don't know because we haven't had the sessions yet.
The President said just 24 hours ago that now is not the time to negotiate trade relations with China, and you've reiterated that since. Why is this not the time now, and when will be the time?
Well, we don't have an exact date as to when will be the time, but you're aware that the two delegations met last week. There was no substantial breakthrough that came from that session at all, and so that's one indicator that it's not necessarily the right time. Secondly, as you know, the United States is scheduled to impose tariffs on quite a lot more product from China coming in here, and I think the President is interested to see the impact that those moves have on the potential negotiations.
On to Indian equity markets. Stock of the day is NALCO. HSBC has initiated a buy rating on the counter with a target price of around 90, which indicates a potential upside of around more than 20% at the current market price. Aluminium volume growth, along with the low cost of aluminium production, it seemed to be the earning growth for this counter. If you look at the overall mix that we have seen 75%, 65% of earnings or revenues coming in from aluminium and remaining 25% coming in from alumina. The note further says that tight market balance is expected to support the aluminium prices, and the plans to expand alumina volumes is a great positive for the company right now. They see the ROE over the next 3 years in the range of around 10 to 11% which was around 5 to 6% in the last 3 years. And also, if you look at the key risks that the brokerage has highlighted, it says global slowdown, lower lower than expected aluminium prices, along with project delays, increase in the scrap imports is seen as a key risk for this counter. Overall, if you look at the Bloomberg consensus rating there, you have more than 12 analysts out of 14 analysts covering this counter which have a buy rating on the counter. Hold and sell, you just have one analyst each in that particular category, and the 12-month market target price for this counter is around 90, pretty much in line with what HSBC has suggested, and the return potential again is 21%. But then do bear in mind also the fact that the stock over multiple times in this one whole year has defied Bloomberg consensus target price and outperformed the analyst expectation.
Shifting focus to currency and commodities market, talking about Indian rupee first, the rupee yesterday bounced back from its record closing low and ended marginally higher versus the dollar at 70.1 levels, while most Asian currencies also recovered a bit versus the dollar yesterday, largely on the back of broad dollar weakness that we have seen globally. Well, speaking of the bond market, sovereign bonds ended flat yesterday as the 10-year benchmark bond yield ended steady at 7.9%. Now remember, the yields rose as much as 7.92% intraday, its highest level in more than 2 months, as rising crude oil prices along with the weaker rupee largely weighed on the bond market sentiments. On the global front, dollar index snaps its 3-day losing streak and it now trades marginally higher near 94.75 levels in the early Asian hours. On the economic data front, US consumer confidence surged to near 18-year high, pointing to a strong consumer spending in the US economy in the near term. That apart, if you see euro, it rose as much as 0.5% versus the dollar yesterday, and it now trades marginally lower, while pound is too trading lower versus the dollar, largely on the back of no Brexit deal for the economy. And lastly, speaking of dollar rupee, now it is trading at 70.22 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up?
Morning, Saloni. Let me start off with the oil prices, which in fact did manage to decline nearly 0.5% in the overnight session, as traders are now watching out for the inventory data. So API is in fact likely to report an inventory buildup of nearly 38,000 barrels for last week, and if confirmed by EIA, this will in fact be a surprise inventory buildup. Shifting focus to the base metal space, the LME base metal index resumed trading after a holiday and climbed nearly 1% and clocked a second day of gains. Aluminium was in focus as it climbed for the 4th straight session, and copper cancelled warrants in fact surged to a 1-year high for itself. LME nickel, which is the top gainer in trade, surged nearly 2%, and it was a second straight day of gains that we saw for the metal itself. As far as some of the other base metals are concerned, zinc and tin closed with positive gains, while lead declined in trade, and in fact it was the only base metal to trade lower. Now the base metals in fact have started on a positive note in the Shanghai Futures Exchange and extended their gains, except for Shanghai zinc, which is trading about 0.5% lower, and we are seeing aluminium, which is inching more than 1% higher. Lastly, as far as gold prices are concerned, we saw that gold in fact broke above the 1200 mark once again, but did manage to come off from that a tad bit on the back of some strength in the dollar index.
Well, amongst the stocks that you should watch and trade today are PSU banks, which continue with their non-core asset monetization efforts. So you have SBI, which has received an approval to offload 3.9% stake in NSE via secondary sale. You also have Punjab National Bank, which has offloaded its entire stake in Principal AMC and Principal Trustee Company. The financial details have not been disclosed, but this is after receiving an approval from the board to do so back in November last year. So watch out for those two names, as also TTK Prestige. Now CLSA has raised the target price on the company from 7010 to 7725. Based on the current market price, it's still a 20% potential upside for this one. CLSA said that The rural consumption and government spending is the key trigger for this stock. They've also said that the Ujjwala implementation will drive demand for TTK Prestige, and amongst the segments which will drive growth, they've said that cleaning solutions and exports are what holds the most potential. So watch out for that name. You also have Kalpataru Power, which will be meeting HDFC AMC on Friday. Mahindra Holidays, which will be meeting investors through the rest of this week. And Mahindra Logistics, which is supposed to meet Edelweiss Securities again from 29 to 31st August. So these are some of the stocks which will continue to remain on the investors' radar.
It's a setback for delivery-based trading in derivative contracts. The tax authorities clarified to the Bombay High Court that the securities transaction tax, which will be applicable for delivery-based transaction and derivatives, would be the same as that which holds in cash market, which basically means that investor would end up paying 0.1% for every transaction that is part of the delivery-based derivative contract. This is the same taxation amount or rate which is applicable for cash market transaction where delivery of securities happen. This entire clarification comes on the back of a case which was filed by ANMI, which is Association of National Stock Exchange of India's members, against the National Stock Exchange. The stock exchange had asked its members to charge the delivery or charge STT at a rate which is applicable for futures, but on conversion they wanted a provision to give a higher STT because they were pending clarity from the CBDT. The CBDT in its circular has informed the Bombay Stock Exchange that there is no reason why there should be a different STT rate which should be applicable for these delivery-based delivery of securities and derivative contracts, and so they use the same logic of cash market to impose the same rate of taxation. Now, if you put in perspective, if you're trading in a futures of a stock, you end up paying nearly 1,000 rupees per crore of transaction value. Now with delivery based transactions, which is part of derivative contracts, you will end up paying nearly 10,000 rupees per 1 crore of transaction value. So it's nearly a tenfold jump in the taxation which is coming in for that, and that's a big negative because the Securities Exchange Board of India, which is the market regulator, was trying to align the derivative market with delivery based with delivery of securities, and as a first phase in March, it had asked stock exchanges to move some of the illiquid stocks to delivery based, and over a period of time it would have aligned it with the cash market going forward. With the higher tax rate, now it would be difficult for the regulator to impose or align itself to the cash market or get delivery based delivery of securities in the derivative market.
Okay, some changes in the Nifty itself and a lot of other indices. Let's talk about the Nifty first. JSW Steel is the new entrant on the Nifty. Lupin goes out of the Nifty. So that's the trend, that's the news that we're getting in. Now let's first talk about the Nifty. How does this impact? So JSW Steel probably comes in with a weightage of 0.76%. Lupin goes out, it had a weight of 0.50. So for this additional 0.26%, some of the other companies which have a higher weight, their weight will be slightly impacted. What is the impact as per Edelweiss because of the move that's come in? You'll see almost 2.5 crore shares of buying of JSW Steel and 57 lakh shares of selling in Lupin. Now this is effective as of September 29th. So as of that date, till that time, you know, companies have the time to go ahead and make this rebalance. A lot of global funds, why is this important? A lot of global funds, since they can't track each and every company here, they benchmark their portfolio to the Nifty. So if a company goes out of the Nifty, they will have to sell it, and if a company comes in the Nifty, they will have to buy it. So that's the trend that we're seeing in on the Nifty. Let's take a look at how the past performance has been in some of the companies. So the last time the revision happened way back in April, Aurobindo since that time has moved up 16%, Bosch is up 2%, and Ambuja is down 1.6%. So the companies that have gone out have actually done well in trade. Now take a look at the companies which got included. Apart from Bajaj Finserv, which has been moving for reasons of its own, is up 32%. Grasim and Titan, both of them are down in trade. And history does show that, companies that go out of the Nifty tend to perform much better once they go out of the Nifty rather than the companies that are included in the Nifty. Now, the other changes that we have seen is that the changes in the Nifty Next 50, which is the after the 50 stocks that the Nifty have, the next 50 stocks that are considered to be the best in terms of their performance and market cap. So Bandhan Bank, Biocon, HDFC Standard Life, ICICI Lombard, and Lupin come in. Lupin comes out of the Nifty and goes here. Similar is the case that JSW Steel goes out from here and goes into the Nifty. But surprisingly, Cummins, PNB, Emami finding place in this list. Now, as far as the mid-cap stocks are concerned, there is inclusion of REC, PFC, and PNB. Jubilant Foodworks comes in, and exclusion surprise companies like Engineers India, IDFC, and Adani Power are going out. And as far as the small caps are concerned, you have counters like Bajaj Electricals, Indiabulls Real Estate, KPIT Tech, and NIT Tech have been doing really well for themselves as far as price action is concerned. So is Radico, Khaitan, they go out. Surprisingly, HEG is finding a mention as far as the exclusion is concerned. Karnataka Bank is another company which goes out as far as the Nifty is concerned.
Well, the losses widen for the parent company of the brand Paytm 197 Communications Limited for the financial year ended March 2018. Now, 197 Communication reported a loss of roughly 1,600 crores as per the filings made to the register of companies. Now, although the revenues for FY18s weren't available, it reported a revenue about roughly 640 crores for FY17 against a loss of about roughly 900 crores. Now, if you look at 197's external fundraise over the last 3 years, the firm has raised close to about 10,000 crores in external funding just in 3 years' time, against a loss of about roughly 4,000 crores. Now, despite mounting losses, 197 Communication one such company which continues to draw a huge investor interest. It already enjoys the might of Alibaba and SoftBank's Vision Fund. Now, Warren Buffett's Berkshire Hathaway, which has usually stayed away from risky technology private stock investment, became the latest investors to partake stake in the company, which is yet to come up with a long-term sustainable business model, but definitely enjoys a huge brand recall and some sort of a brand loyalty among the Indian customers.
Well, on to the top 3 stocks to watch based on yesterday's trade activity. The first stock on the list, that should be Yes Bank. Now, that was down about 3.5% in trade yesterday and saw delivery selling of nearly 370 crores. The delivery volume surged about 66% as compared to its 5-day average, and the total volume surged about 84% as compared to its 5-day average. Second stock to watch out for, GAIL India. Now, that was also down about 5% in trade and saw delivery selling of 125 crores. The delivery volume surged about 88% as compared to its 5-day average, while the total volume managed to more than double itself as compared to its 5-day average. Last and final stock, Adani Port and SEZ. Now, that was up about 2.2% in trade and saw delivery buying of nearly 66 crores. The delivery volume and the trade volume, both of them managed to nearly double itself as compared to its 5-day average.
There's not a lot of news flow from last evening and overnight, but there's clearly lots to talk about over the course of today. You'll find all the live market action, of course, on Bloomberg Quint Live, and still several stories on the website that you might find interesting to read. Here are just a couple. US-based fund house T. Rao Price Group, a foreign shareholder of UTI Asset Management, has withdrawn its writ petition filed before the Bombay High Court seeking its intervention in managing the company's affairs and protecting its investment. And analysts have lowered earnings estimates of 3 out of every 5 companies after the June quarter earnings. Earnings per share estimates were downgraded for 57% of the 251 companies tracked by at least 10 analysts, according to data from Bloomberg. Analysts raised the forecast for 39% and kept estimates unchanged for 4% of the companies. You'll find the details in the story on the website. That's all you need to know going into trade today, but do stay tuned. Up next is Indian Open and it'll take you through Market Open. This is Bloomberg Quint.